Hey friends, welcome to the Singapore Market Digest for Monday, April 21st, 2025. I'm Iggy from the Investing Iguana, and today we're diving into what's been happening on the SGX. We've got leadership changes, big money moves, and even a bit of shareholder drama to unpack, so let's get right into it. Today's market action felt like a mixed bag. Some stocks rode the wave of positive news, while others faced a few headwinds. The Straits Times Index didn't make any dramatic moves, but several individual companies definitely gave us something to talk about. Let's start with ST Engineering, which is a blue chip favorite for many investors. Their shares closed at $7.13, up about 1.4% on Thursday. The big headline here is a leadership handoff. Ravender Singh, who has been the Group Chief Operating Officer for Technology and Innovation, as well as President for Defense and Public Security, will be retiring at the end of May. Taking his spot is Mvin Tan, who comes from Vertex Ventures, a venture capital firm that's backed hundreds of startups. This isn't a sudden exit, though. Singh will stay on as an advisor, which signals a smooth transition. For investors, the steady share price suggests confidence that ST Engineering will keep pushing forward in defense and smart city technology. It's like passing the baton in a relay race, with the team still running strong. Next up is Keppel Corporation, and they're making some serious moves in the investment world. Keppel announced that they secured nearly 2 billion Singapore dollars in new capital commitments from institutional investors across 3 flagship funds. That's a lot of fresh powder to put to work. This includes $580 million raised at the first close of their third data center fund, which is focused on Asia-Pacific data centers. The market liked the news, with Keppel's shares climbing 1.1% to close at $6.19. Why does this matter? Well, data centers are becoming the backbone of the digital economy. Every time you stream a video or use an AI chatbot, it's running through a data center somewhere. Keppel is doubling down on this trend, especially in Asia, where demand is exploding. With nearly $5 billion now under management, Keppel is positioning itself as a major player in digital infrastructure. But not everything in Keppel's world is smooth sailing. Their data center real estate investment trust, Keppel DC REIT, saw some drama at its annual general meeting. The lead independent director, Kenny Kwan, failed to get re-elected by a razor-thin margin. Just over half of the votes were against him. This means he'll be stepping down, and Lo Huanping has been appointed as a new director. The timing is interesting because this leadership shakeup happened just before the release of their first quarter results. The stock slipped about 1% to $2.03. For REIT investors, this kind of boardroom change can raise questions about strategy and direction, especially with rising interest rates putting pressure on yields. Still, data centers remain a strong asset class, so it's worth watching how the new leadership steers the ship. Now, let's talk about City Developments Limited, or CDL. The company took some time to address a wide range of questions from shareholders, covering everything from its share price decline to queries from the Securities Investors Association of Singapore. This all came out in a Bourse filing ahead of their annual general meeting. CDL pointed to broader macroeconomic concerns that have been weighing on both equity sentiment and capital flows into the real estate sector. They also mentioned that their upcoming removal from the MSCI Singapore Index at the end of May has affected their share price. All these factors have made it harder for CDL to execute its strategy as quickly as they'd like. Despite these challenges, CDL's leadership said there's no need for any interim or temporary measures. Operations are running smoothly, and they believe the strategy set by CEO Sherman Quek since 2018 is still the right one. It just needs more time to show results. Interestingly, the market seemed to take this in stride, with CDL shares rising 2.2% to close at $4.69. So, what's the big picture from today's news? We're seeing leadership transitions at ST Engineering, major capital deployment at Keppel, governance shifts at Keppel DC REIT, and a message of strategic patience from CDL. For REIT investors, keep an eye on occupancy rates and how management changes might affect future plans. For those interested in growth, watch where Keppel puts its billions, especially in the fast-growing data center space. And if you're following the property sector, CDL is betting that the cycle will eventually turn in their favor. But patience will be key. That's the scoop for today. Remember to do your own research before making any investment decisions. This is Iggy from the Investing Iguana, signing off. Thanks for tuning in, and I'll catch you in the next Market Digest.